Good afternoon. This is Phillip Streible, Senior Commodities Broker at R.J.O. Futures, giving you daily metals commentary here from the floor of the CME Group. Looking at the metals, we've got gold kind of flat to slightly lower. A lot of traders are very concerned about this two-day FOMC meeting. It'll conclude tomorrow. A lot of people are looking whether or not the Fed is going to start that taper in September or if they're going to delay it. And also a lot of the metals traders are looking for any kind of guidance on this near-term data. But I don't think this data that we're seeing right now is having any impact. This is data over the past few weeks, which has been, rather mixed. So I don't think the Fed will give any kind of specific cue on it, but what I think the Fed is looking to do is kind of compress those interest rates again, make interest rates come back down, have the bonds start to widen back out again, and I think that might be somewhat supportive for gold. Initial reaction, we probably thrust higher, then we break a little bit lower, and I think we kind of start to after the sell-off, I think over the next couple days after that, we'll actually start to trend higher coming into the unemployment data, which is on Friday. Silver seems to be a little bit weaker, staying below that $20 range. It's like in the 1980s. It's having a whole assortment of problems. As silver just seems to be a little bit more heavier of a metal than the gold market. Gold, on the other hand, is actively pursued by central banks, so that weakness there we believe is bought up by central banks trying to build more positions, build more reserves. 1308 is a key level of support in the gold. I think if we take out 1308, we'll most likely trade down to 1300. Below 1300, I think it'd be a quick and nasty $20 move to the downside. But below that, I think somewhat on the downside's limited unless they really come out and they are very firm about that tapering. If you look at copper, on the other hand, copper has just been drastically weak. It's hit by slowing China. All the economic data coming out of China has been really slow, below expectations. They're even starting to cut some of the reserve requirements, and that's not really helping out. It's not getting that inflation going. It's not getting them to eat up that demand or that supply that they have or spark any kind of demand. So I think copper, that's one of the weakest of the metals along with the silver market. Platinum, palladium, on the other hand, look at the global picture. The automotive sales and then the housing boom has really brought this platinum, palladium back up with the labor disputes that we're seeing in South Africa. There's been no resolution to it, and it seems to be two-sided, and it's almost like a stalemate at this point. So other markets you want to keep an eye on, the dollar index, that's been rolling over pretty hard, and then if the equities and the crude oil, if they continue to start to slide, you might see a little bit of money funnel back into the gold market, but it seems like guys are mainly going to this cash position coming into this drastic week that we're going to have. Again, this is Phillip Streible with R.J.O. Futures. Give me a call, 1-800-438-4805. I'm coming to you from the floor of the CME Group. And remember that futures and option trading does involve risk of loss, and it may not be suitable to all investors. Good luck and good trading.